Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, December 12th, 5:40 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend. You can see the trend gauge over here on the upper right, market leadership marked with a green arrow, leaders working fine. All five of the major indexes also flagged with a green arrow across the three time frames that we track. That's the short-term 21-day exponential moving average, the medium-term 50-day moving average, long-term 200-day moving average. We did add a yellow stop sign, or not a stop sign, a caution sign, as we are on the S&P 500 5.5% extended from the 50-day moving average. Normally, when you hit between 5.5% and 6%, you see some sort of a pause. So wouldn't be surprised if we go sideways or pull back. 2.3% above the 21. We frequently get more extended than that. This is more a versus the 50-day moving average, and I really the point I'm trying to make is if you're underinvested, piling in when you're extended from these levels, perhaps not the wisest choice. But what happened today? Fourth straight day up for the three large cap indexes, but we've got the FOMC interest rate decision, and it's pretty much a foregone conclusion that there's not going to be an interest rate rise. In fact, the market is looking closer to interest rate cuts early next year, but it's going to be the tone of the statement and the answers during the Q&A that are going to dictate the reaction of the market. Usually pretty volatile on Fed afternoons and then overnight into Thursday. One concern is that obviously with fourth day up and being somewhat stretched to the upside, that a front run has occurred before the decision, and really the risk is skewed to the downside. But as always, we've got our stops in place, and we'll hedge if necessary, or reduce exposure as necessary, both into strength and into weakness, depending on how we end up. Here are the numbers on the day. Big seven up 0.84%. Our 8 growth ETF composite, the RG8, up 0.23%. S&P 500 opened down 1%. CPI mixed results before the open. Initially, the futures gapped up about 0.5%, then slowly bled into the close, opened up slightly negative, but we put in the low right away within the first 15 minutes and then trended higher all day. So good performance by the big cap indexes there. Equal weighted index up a little bit less, up 0.2%. NASDAQ 100 up 0.8, equal weight up 0.5. Dow Jones Industrial Average up 0.5%. Mid caps took a little bit of a break today. They're consolidating near the top of their range. There's a lot of VWAP resistance. That's volume weighted average, anchored volume weighted average, versus the all-time high on the Russell and several other confluences right above the 187.40-ish level. Over the past couple of days, we've gotten above that level and then pulled back, so that resistance is intact. And really what we want to see on the small caps is a blast above 187.50 and keep going to break that resistance. But the mid caps and small caps down 0.2 and 0.1% on the day. 60-40 global stock and bond up 0.33%, equal participation by both stocks and bonds. In-house GROTECTION, nice day, up 0.73%. Let's get to the charts and then to the indexes. You can see 4 days up higher in a row. If you look at a 60-minute chart, look how tight this is. This just looks like relentless melt up accumulation, just what the bulls want to see. But now obviously the reckoning of what the Fed decides. I'm expecting Jerome Powell to say, hey, higher for longer. I told you we're not cutting interest rates. And it's the reaction to that message that's going to be key. But for now, 4 straight days up near the top of the range. As I right click here, you can see 2.3% above the 21 EMA, 5.5% above the 50-day moving average. Let's go to the NASDAQ 100. 6.8% above the 50-day moving average. That's also extended. Normally 6 to 7% is the outer band versus the 50-day. 3.1% above the 21, also extended 4 days up. You can see that also. You look at a 60-minute chart, that's just accumulation of the NASDAQ 100. Any pullbacks have been very shallow over the last 4 sessions, last Thursday, Friday, and Monday and Tuesday. But then again, we've got the Fed tomorrow. Big wild card. Dow Jones Industrial Average 4 days up as well. New closing highs, just beautifully riding the 8-day exponential moving average higher. Mid caps not making highs, at the top of the range, as we mentioned, consolidating for 7 days now, coiling for a move. Nothing wrong with that. You can see quite a bit of that going back to the moves off the lows, up, down, or sideways. We did our up week and a half ago, now pretty much going sideways. And IWM small caps, you can see the highs, really for the last 5 days, that high above that 147.40-ish key level every day for the last 5 days. That's why we set my alerts again in this level. They went off today, but we didn't follow through the upside, so it's very clear what we're looking to see out of small caps. Let's go to the VIX. VIX, man, the bears can't believe this. The VIX is contracting, and so is the intraday range on the S&P 500. It made a 6-week low today, and that's exactly what the VIX is reflecting. Down 4.4% today. It briefly had an 11 handle before bouncing slightly. Let's go to the dollar. The UUP, down 1/3%. Gold and silver stocks, not good here. Gold just barely down, but gold stocks hammered again, down 2.34%. And silver SLV down 1/3%. Bitcoin BITO bouncing inside day versus yesterday's action, but running into the declining 8-day exponential moving average. Sometimes the first time you break that and it rolls over, it acts as resistance. We really want to see today's highs, and really preferably the highs of Monday, clear to get firmly back above that 8 EMA and hook it back in the direction that we want it to be. Over to bonds now. Broad bond index up on the day 1/3%, pretty much across all durations. And I want to point out, well, let's go to TLT first. This is the long bond, up 1/3%. Look on the 5-minute chart here. We had at 1 o'clock Eastern time, we had the results of a 30-year bond auction, and it went well. So you can see the bounce up on the TLT. That means price higher, and then consolidated into the close. Higher price means yield down. TYX, you can see the yield dropping right there, right when that 1 o'clock bond auction came in. So good stuff there. And you can see the yield lower here, or TYX, yeah, the yield lower by 0.6%. The 10-year TNX, look at the 5-minute chart, you can see the same thing. The yields dropping. So good stuff there. That's our inter-asset correlation that we discuss in every video. Let's go to the tail of the tape. The important thing now, VIX, 2 p.m. tomorrow. Got to keep an eye on that. That's really the main thing to take away from this video. As far as the portfolio went, we bought Path back. We got stopped out of that last week. It bounced off the 8 EMA, started working its way back higher. We added back a small position in that. And CCJ, the House passed a resolution limiting uranium exports from Russia, and this, from some stuff I read, is beneficial for CCJ. Came out right about here. As you can see, this spike up on some volume was when that news hit the tape. We added our position here. First buy is profitable. Now the second buy slightly up on that as well. So CCJ added to Path, raised our adjusted beta just shy of 2.0. Bottom line on the day, CPI mixed, 4 straight up day for the large cap indexes, bond auction okay, FOMC tomorrow. Important to see how How the reaction to that plays out, and as I said, stretch to the upside. Not where you want to be when you're looking for a positive reaction to something, but we are where we are. The numbers are what the numbers are. We're aware of the historical norms, how far we can get stretched. But market's extremely bullish right now. It has been since the beginning of November. All right, let's go to a couple of charts. We showed CCJ, a couple of other things that we own. I'll highlight GTLB back above that 60 level. We did 3 buys on this, got stopped out on the third one, looking to add back on this, but we're waiting for the smoke to clear after the Fed. AMD continues to just take off like a rocket ship for the 4th straight update. Look at that accumulation. Looking for any way to continue to add to this because this really jumps out at me, confirmed by relative strength and massive volume. NVIDIA, looking okay, regained the 8 and the 21-day exponential moving average, but compare the volume on this to what's going on with AMD, and it's very clear. And again, it's a capacity issue with AMD having Taiwan Semi and Samsung. Their ability to increase their production, as they highlighted last week, has really been a different maker on what's going on with their stock price. Coin bouncing off the 8 EMA. Let's see what else stood out. DUOL. No intention of chasing this one again. It does not trade smoothly, and it has very wide bid ask. But it is breaking out, and it's fine for a smaller account, not for someone like us that manages $130 million. PDD back above that 140 level, got shaken out below 140. We'll consider re-engaging in this also. That's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. My partner, Dan Stewart, dan@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Please like and subscribe on YouTube. We appreciate it. I answer all comments. And with that, reminder, it's not how much you make in the market, it's how much of that you can keep. But you got to make hay when the sun is shining, and it is on bulls right now. That could change tomorrow, depending on the reaction to Jay Powell and the 2 p.m. FOMC decision and the press conference afterwards. But we'll let the market decide that. And with that, I'll wrap up the video for Tuesday, December 12th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening, and have a great day.